This is why we buy the damn dip, guys. What is up, you guys? It is Rob here. If you bought AMC back on Thursday when we hit $39, you'd be sitting rather pretty right now. AMC finished up a beautiful 15% on Friday, closing at $49.40. We'll take a look at the past week, and then we'll take a look at a week ahead because, guys, this week is going to be crazy, and I mean crazy. The potential for a gamma squeeze is definitely on the table because the amount of options expiring this week is insane. So strap yourselves in, prepare for the volatility, prepare for the rips, prepare for the dips. And today we'll cover the charts, we'll cover Ortex, we'll cover the options chain, we'll cover Stocko Tracker. We're also going to talk about TD restricting same day options on AMC and GME. This is a thing that I didn't know about, and I'm an Ameritrade customer. So this is something that pissed me off on Friday because I was not able to buy options on Friday the same day they expired when AMC was ripping, which is annoying to me. But got to talk about it because this just shows something that's going on the back end here. And then we're also going to talk about hedge funds losing about $6 billion year to date, and this just puts a smile on my face because some of these people said they closed out of their positions when they really didn't. But if you guys can, do me a huge favor, drop a like down on this video, hit that subscribe button, make sure you ring that bell for the YouTube algorithm because it really does help me out. Let's get this video out to as many apes as we possibly can, because the more knowledgeable apes we have, the better and better we become, and the more and more the hedge funds and market makers should be afraid of us. So let's dive into this, guys, and take a look at the chart for Friday here. We bounced off of $42, which was absolutely beautiful. We respected this level of support here, and we consolidated loosely. I'm going to say because we're still having a very volatile period, but we did have good, okay periods of consolidation. We didn't have hour-long periods of consolidation. We had about 10 maybe minutes of consolidation. But this bounce here off of $42 was absolutely beautiful. This bounce here off of the VWAP, which stands for the volume weighted average price. So if you bought AMC on Friday, this is about the price that a normal person would pay for it. And the fact that we bounced off of this is an incredibly bullish thing within the stock, in my personal opinion. The other thing I want to point out here on the one day is the fact we had higher lows the entire day. Phenomenal, phenomenal. And guess what, guys? We traded less volume than what we did on Thursday, and it was a green, and Friday was a green day, Thursday was a red day. That's a big deal, guys. It shows the conviction of the apes and the power of the apes within this stock. Because guess what, guys? We're not freaking leaving. We're going to diamond hand our shares, and they're gonna have to pry them from our cold dead hands because we're going to freaking Pluto, guys. Now let's take a look at the 5-day, 5-minute chart. And this $39.71 dip was the dip to buy, so you could dip your candies in it, whatever dip of choice you want, because holy cow, if you bought that dip, I bought the dip. Remember, not a financial advisor, none of this is financial advice. I bought the dip, and I'm so happy I did because holy cow, I'm sitting rather pretty. I did average up some because I bought a while back, but hey, completely worth it because now I'm up plus 15% on those shares that I literally bought 1 day ago. You can't tell me that we're dumb money. Well, as Wall Street says, we are slapped with the label dumb money. I'll take it because right now I'm making a lot of money. They're losing a lot of money. Now let's zoom out here to the 1 month, 1 hour chart and take a good look at this. So ever since we hit our all-time high at $77.26, we've been fighting a descending level of resistance. We have 3 touch points, the all-time high, a touch point here on the 8th, and then a touch point here on the 10th. Well, we technically broke through this on Friday, which is a very bullish sign. So instead of being in a bull flag, now we're making a bear flag. Just to give you guys a little technical, bull flags are descending and you're looking for a break to the upside. Bear flags are ascending and you're looking for a break to the downside. Now, bear flags can go on and on and on and on for a while. And we're just starting this trend. And I think, guys, this week is going to be crazy. And the craziness that is going to occur is going to be absolutely insane. I'm ready for anything and everything because the amount of calls we have expiring in the money right now, the amount of calls we could potentially put in the money, crazy huge. But the technical levels that I'm going to be looking at is getting over that $50 psychological level of resistance right now, and then technically $53 and get us back between that $53 and $62 channel. If we can get back between that channel, good. After that, let's consolidate in that channel for a little bit and then make a move up to $62. And once I think we really get above $62, it's going to be a run to 70 and a run to the all-time high after that. That's just my personal thinking, but that's how I can see it. $62 is really going to be the kind of like the break free moment that the stock's just going to start running. But let's take a look here at the year-to-date time frame just to remind us of how far we've come, guys. We've come so far, and we've really not given that much up. When we take a look at it, we've had about a 50% pullback. We bounced off of 39.73 on Thursday, and then you can see that we bounced off of $42 on Friday. So we're definitely moving back up, and we're getting ready to get into this tight consolidation range. Hopefully we can get back above that $53 mark and make it between $53 and $62, because that would be incredibly bullish for the stock. Now, the RSI and MACD, yes, they are. RSI is back underneath overbought. Yay. MACD is kind of getting back close together. However, take these indicators with a grain of salt because we're really only looking at the candles, guys. So let's dive in here to take a look at the short interest change on Friday, up 0.44%. We saw 4.6 million shares borrowed, 4.26 million shares returned. We have a net borrow change of about 341,520 shares. Average cost to borrow around 2.5%. The thing that I really want to point out here, guys, is I'm looking at the shares on loan and it has dropped drastically. And what the shares on loan means is someone just took out a short position and they haven't established it yet in the market. So they're just holding the shares, paying that cost to borrow fee. Well, if I was a short for some crazy reason and I was like, oh, well, I have all these short shares, I would be giving them back because I would want nothing to do with shorting the stock because it is literally just playing with fire. It is not a good idea at all. Like Kramer has said it several times, playing shorts on these positions, you're just asking just to lose money. It's insane. The apes are a different breed. We have bulls, bears, now there's apes because apes diamond hand, hodl, because we know the squeeze is on the table. Now, the other thing I really want to talk about is our estimated short interest or free float is still sitting around 12%. Guys, that is still entirely squeezable. It is still squeezable. Our free float on loan is still sitting at 15.29%. You add the two of those together, you're looking around 30% short interest within AMC stock. That is insane, guys. That is still a very strong short position within the stock. Now let's take a look here at Stocko Tracker. We put 90,008 calls in the money on Friday. This week, if we zoom down here and take a look at the options chain, 414,377 calls are currently in the money. That is insane. That is a 400% increase on calls that are in the money this week. This is the reason why I say a gamma squeeze is absolutely on the table for this week and could happen next week if we end up putting the $40 strikes in the money at a bare minimum. This is a lot of delta hedging that these market makers are going to have to do. And why do I talk about delta hedging? Because when these market makers issue out contracts, you have the right to exercise them, which means the market maker has to provide you 100 shares. Well, in order for the market maker to say, all right, well, all these calls are currently in the money, we need to reduce our delta exposure so we can provide out these 100 shares. Think of this analogy. You have a car salesman that gives out 100 slips saying, I'll sell you a car for X amount. He needs to make sure he has 100 cars on the parking lot, because if one person comes and says, where's my car? And the salesman goes, well, I don't got a car for you. That's FTDs right there, guys. That is FTDs plain and simple. So these market makers are going to have to hedge. And if we take a look at the options chain here in Webull and really look at some strikes, so the $59 and $69 strike is the next ones I'm going to look at after the $40 strike. So the $40 strike, we have 107,077 calls currently in the money. $50, we put another 25K-ish in. But really, 59 and 60, we put another 43,000, almost 44,000 calls in the money. So that's another, I can't even do the math in my head right now because it's insane. The gamma squeeze this week is going to be insane, guys. It is entirely possible that we see a gamma squeeze going on here because this is such a high amount of open interest going on. And if we continue to drive the price up, it's just going to get crazy. Now, the other thing I want to point out is there is a very large put wall here at $40. And if we take a look here in Stocko Tracker, there's currently 607,830 puts out of the money. So you know there is going to be an absolute fight between the shorts and the apes this week. It is going to be crazy. So just prepare for anything. I'm not going to even feel comfortable giving a price prediction this week because anything is on the table. So just prepare for that, guys. Anything is on the table. But taking a look here, 1.5 million short shares of AMC are available to borrow, 5,799 short ETFs. And when we really dive here into the short ETFs, we see that the heavily weighted ETFs that have a lot of AMC in them don't really have a lot of short ETFs available. It's a lot of the smaller weight ones that have more available. And this just shows that AMC is seeing short interest not only through AMC short shares, we're also seeing it through short ETFs too. Now, the other thing that I want to cover before we cover the thing that's going to put a smile on all of y'all's faces is TD Ameritrade. If y'all are TD Ameritrade articles, customers, not articles, you're going to want to check this out. I'll link the article down below in the description. Securities with increased margin requirements and trading strategies. This was published as of the 11th, and I did not get an email notification about this because I do hold AMC and GME positions in my Ameritrade account. And the fact I did not get an email about this pisses me off even more. And trust me, this makes them look like another Robinhood, in my personal opinion. Simple AMC opening. Orders on AMC options expiring will not be accepted after 1 p.m. Eastern Standard Time today. So if you buy an option expiring on the 18th and it is Friday the 18th, you won't be able to buy that option after 1 p.m. Eastern Standard Time on the 18th. Definitely restrictive in general, and I do not like it at all. That is something that should not be done. This is something that Robin pulled back in January and really capped the squeeze of GameStop. And now we're starting to see it again. And I'm starting to think maybe it's time to switch out of my Ameritrade account and just go full back in the Webull because I just have a couple different accounts and want to diversify. I might just have to go back to Webull and stick to Webull only. But also, they're doing this with GameStop too. Opening orders of GME options will not be accepted after 1 p.m. Eastern Standard Time today. So we're going to see this moving forward. And what this tells me is the fact these market makers, prime brokers, and all that kind of stuff are having a bad time because the risk level is so high that something's going on here, something's going on the back end that they don't want to tell us about because we're seeing restrictions on the front end of it. Definitely a big deal in my opinion. Now, the thing to leave you guys on a lighter note about is the fact this article, I'll link it down in the description of this video too. Melvin Capital and Light Street have lost money this year significantly. Melvin Capital is currently at a 44.7% loss year to date. Incredibly hysterical because didn't they say they closed out their positions, if I'm correct? Didn't they say they did? Clearly not. Light Street Capital is also down another 20.1%, and this is about $6 billion USD since May. Since May, guys. That is huge. That is a lot of money. You know these shorts are bleeding. We can see everything starting to add up. The squeeze is absolutely on the table in my personal opinion. A gamma squeeze is definitely on the table this week. There is no way we cannot be talking about a gamma squeeze with this many options on the table. And if we add the other 303,660 options into the money, this 414,377 is already 41,300,000 41,437,700 shares that they have to delta hedge for. They might have already delta hedged for some of it, but they definitely haven't delta hedged for all of it yet. And this 303, even more astronomical, guys, in my personal opinion. This week is going to be crazy. Strap in. I'll see you guys in the next one. Peace.